Wait. Okay, so let's stop there, Johnny. Can you deduct your manicures?
But if you
Interesting.
have basic nails, that is a normal thing you would do anyways. You can't, it's a personal and primary, you're just using it. But if you do like a Halloween special, maybe that can be, you can swing that.
Good evening, everyone. Joel-ATX, welcome to Five with Joel-ATX podcast. I have the best guest at the best time, Johnny, sports card tax guy. How are you doing?
Good. Yeah.
Did I say it right? Sports cards tax guy.
Sports card tax guy. There it is.
There you go. He's kind of a celebrity. If you've been on YouTube and you've looked for any kind of help, his wonderful mug will show up and he's going to help you, and he already has. So this is perfect timing. We're just talking kind of off camera. Everyone who's been streaming on Whatnot just got their lovely 1099s, and everyone is
Yeah.
probably hitting the panic button. I can tell you
Hmm.
this: when I started selling, I was like, I'm going to sell sports cards. It's going to be fun. I can deduct everything, no hassle, and all that is incorrect because you're actually running your own business. And thank God there's people like Johnny out there, because there's not a lot of people who specifically specialize in helping folks out do their taxes, do their bookkeeping when it comes to running their sports card business. So, Johnny, thanks again so much. I know you're super busy, and I appreciate the time.
Hmm. Yeah.
Johnny's in Gainesville, Florida. We were just talking, two kids just like myself. He's been collecting since 7 years old. Mark McGuire, how did that happen? He's a collector of Mark McGuire.
Yeah. He was my hero, home run king. And I saved up money when I was 7 years old, $100 at my local card shop.
Yeah.
And there weren't graded cards. So it was $100 for, I wish I still had it, but just the basic, that one there, the Tops USA
Oh, sure.
1985 McGuire. Yeah, $100. It's $15 now raw, but it was before the steroid thing. And
There's certain memories you have, like certain things in your sports, like in your brain. And I always remember that record-setting home run, that line drive left field. It was so kind of like almost anticlimactic, but it was so beautiful at the same time. I'll always
yeah,
remember
he
that.
like skipped third base as he's running.
Yeah. Well, cool, man. Let's get right into it because I know everyone's really excited about this. We all need help, and you're the guy to help. So let's take a step back. How did you start this business, and what do you specialize in, Johnny?
I studied accounting in college and a master's in entrepreneurship, and I took a little route where I tried to build an app to like carpool between cities. And that was
Hmm.
fun. Just didn't
Yeah.
didn't work out. So I've always been interested in entrepreneurship. My dad had multiple businesses and selling sports cards on eBay since 2001. So I started my first eBay account in like 2008, and then just always around that. The thought was I could do the family business, Petruco's Collectibles, and then but took the route of accounting. And about a year ago, saw the two merge. So was doing a lot of research with my accounting firm how I can specialize, and then found a lot of comments and talk on Reddit and Facebook groups, and a lot of questions on YouTube comments, and not much of a clear answer. So that's what interests me. Kind
I
of
can
hopped in.
relate. I can relate to that because that's kind of why I started this. As
Yeah.
new streamers, there's not a lot of information out there, Johnny. And so I kind of
Yeah.
was, going through YouTube myself. I'm like, wow, I type in like whatnot streamer or sports card advice, and like the same old bland videos would pop up. I'm like, there's a market here. People need help. So it's kind of cool that you did that. This is amazing timing, as you well know. We just got our 1099s. Um, I'm going to take a step back. So when you think about someone who's just streaming for the first time, they're probably not thinking about like I'm going to my own business, right? I'm going to just sell cars and have a good time. So instead of having them like me make mistakes for the past year and a half and now try to figure it out, what can new
Mhm.
streamers do right away to kind of get things in order?
Yeah. Uh, every startup, it's like personal collection and personal enjoyment. So you're commingling, your transactions are all going into the same bank account, and that's normal and okay initially. As quick as possible, as soon as you see some traction, and if you want to classify as a business, that's going to be one of the indicators is have a separate bank account. So you don't have to have an LLC for that. There's a number of ways to do it, but at least technically, if anyone comes back, you would want to show a separation, and then you just relink your whatnot account and then a credit card. I'm all about like credit card points. So there's a benefit if your business model is buy raw grade, you can rack up a lot of credit card points and
Sure.
a separate credit card account, separate bank. That's one thing.
I think that's pretty simple advice is just keep things separated. I know Scott, one of my mentors, he makes sure that he has a credit card just to buy anything his business wise. So everything is in one single point, right? One window, if you will. And
Mhm.
so for me, like I'm not looking forward to doing last year's because I have multiple credit cards, PayPal. I sell on eBay as well, Johnny. So it's going to be just a smorgasbord of crap I'm trying to figure out. So I'm
Mhm.
excited about this year. I finally figured it out and I'm doing the right things, but I think that's really great sound advice. So let's say someone is streaming, they're like, you know what, I'm actually doing well. I want to start taking this seriously. So what would be their, in your opinion, what would be the best course of action from sole proprietor, single member LLC, S corp? Do you have an opinion on that?
Yeah, for streamers that are shipping things, I feel like there's more liability than other business models. So really, an LLC, a lot of people get that because it's formal and it's official, and I think that's important in your mindset. I'm an LLC now, so you kind of operate a little differently. I have my own little trading card, and I don't technically have an LLC. I just have it as my social security number. I got an EIN and I added on a DBA, doing business as name,
Yep.
because mine's like really small. But streamers, the whole purpose of a limited liability company is if that entity is sued, then your personal assets are protected. And there's some all kinds of things that people can, or the shipping and
Sure.
so get the LLC,
Okay.
and then you would have your EIN next and use
Hmm.
that to open up a bank account. So that's going to be, you can have the same deduction. So that's a misconception. You can deduct supplies and travel and all those things, whether as a sole proprietor or an LLC.
Okay.
By default, you're actually a sole proprietor. So you have to form an LLC. The reason why for some it won't make sense is California, $800 minimum per year.
Hmm.
And so it's going to be about a matter of your risk tolerance. Do I want the liability protection? And then Texas is like $300 for the first year, and then there's no renewal. So that's a nice. Usually states have an annual renewal.
Got it. We can go two different routes here, and I think I know a lot of people want to know. So we could either talk about what tools do we leverage for bookkeeping, general accounting. I think I know what you're going to say there. And then as far as just overall deductions, right? Like what can we deduct? How do you track it? Things like that. Which one you want to take on first?
The tools,
Okay, let's talk about
yeah.
tools.
I mean, the first way is the separation is going to make it easiest. So I recommend Google Sheets or QuickBooks.
Hmm.
Now, I service people like monthly. I do monthly bookkeeping. I think quarterly is what I would recommend at a minimum.
Okay.
You have some quarterly uh, a view, a health of what's happening. Because if you're a business now, you should get a feel of what's happening in your
Well,
overall financial health. For compliance purposes, you can do bookkeeping once a year. It's not very good for managerial purposes, but this is common where you do a whole cleanup. So if you are kind of scattered and you don't keep up with it, you would just by the end of the year you can export your credit card activity, your bank account. You can stick that on a Google sheet and then categorize things.
mhm.
If you want to do something where you monitor on a monthly basis or quarterly, I'd recommend QuickBooks. You just connect those one time. You can set up rules so that
Mhm.
your things go in the right categories and so forth.
Yeah, I think with anything, automation is key, right? And it seems like QuickBooks, they've got a great plugins with everything you need. I don't think there's a whatnot. I think there's a whatnot plugin, but it's a third party that you have to pay for. I forgot the name, but to me is like, especially for new business owners, the more you can have automated, the better. Would you agree?
Yes.
Nice. Okay, so I think that's super helpful. Google spreadsheets or QuickBooks. Let's talk about deductions because I think there's a lot of, I don't want to say false information, but people think they can deduct oxygen nowadays. So, like, as a sports card shop owner, streamer, what can you exactly deduct?
Uh, I just saw this video today, so I'll start with a questionable thing that you might not deduct. A whatnot streamer, you were talking about a manicure. So I love the backgrounds of so many whatnotters. You got you could just tell the certain kind of person, the slabs they have in the background, or
Yeah.
like I do like the people that show face, but mostly you're having a similar setup, and it's cool. People are creative, and I love going on there.
Wait.
Um,
Okay, so let's stop there, Johnny. Can you deduct your manicures?
so the guy was saying you can deduct your manicures, and it's a ordinary and necessary expense for your business. And then I quickly read the comments, and someone said, "No, you can't because this and that." So yeah, the technical thing is if you have something like a uniform, for example. So there's like in the TCG space, this is related. There's this guy I like seeing he's got a Charizard onesie on,
I've seen them.
and so
Yeah.
he's always
Yep.
got that. That's a
Yep.
uniform that you can deduct because it's something you won't wear outside typically, outside of your
Interesting.
videos.
Okay.
So you can uniforms or makeup, like movie actors. The makeup is for that purpose, and they don't wear that kind outside. But if you
Interesting.
have basic nails, that is a normal thing you would do anyways. You can't. It's a personal and primary. You're just using it. But if you do like a Halloween special, maybe that can be you can swing that.
Things I thought we'd never talk about are manicures, but here we are. Here we are. Okay, let's talk about the real stuff
But
now.
the
Let's
normal
stop talking about
stuff, yeah,
manicures. So yes, okay.
the common things, um, of course, your cost of goods, your purchases, and we can get into that later. There's a couple ways to calculate that, but the shipping supplies, card supplies, very common travel.
Mhm.
Some of the less common things or things that you might miss, which are personal expenses that you can essentially reimburse as business, would be mileage and home office.
Okay.
So everything else, it's you're going to hit your credit card fees and all that. You're going to see hit your Amazon purchases.
Hmm.
Um, so mileage, that's going to be most people are going to do it the standard mileage rate, and that's 70 cents a mile.
Okay.
And so when you're buying deals, you have a log, or at the end of the year, at least you can do some estimations like the post office twice a week. I go 5 miles times 52. And then
Yeah,
at the end, if you're a Schedule C sole proprietor, you would just plug in that number and then multiply by 70 cents. 5,000 miles, 70 cents is 3,500 deduction.
that makes sense. Like if I go to the Dallas card show 3 times a year, I can easily do the math there, and there you go. So
Mhm.
yeah, that makes sense.
If you want to be like really to the line, you could do an app. There's Mile IQ. It just records transactions, and then you swipe left for business, swipe right for personal. You
You
can
said mile
do
IQ.
Yeah, Mile IQ.
Okay.
Um, Even QuickBooks has a version of that. Or you were supposed to do like date, description, purpose, and then miles driven. So
Okay.
that prevents you from like estimating, but you know, it, yeah, there's a lot of it's all self-reported. So it's an interesting, economy. Like it's self-reported. So most things are according to what's reasonable and what you feel like you can um, rep- protect if you're ever
Yeah,
asked.
we'll talk a little about mistakes made later, kind of in line with that. You brought up a couple other things, Johnny, that I wanted to talk about, and I know is very popular. Uh, if you're streaming and you have your home office, how does that work as far as deductions go?
Yeah, yeah. So home office, you have also standard and actual. So the standard and actual with the mileage, and then with home office, The standard shouldn't be taken. I mean, people do it because it's easy, but you're not going to get the most benefit. It's maxed out at what, $300, $5 per 300 square feet. So
Okay.
the max deduction you get is 1,500 if you have a
Okay.
300 square foot office. But if you had a 300 square foot office and you are what, 1,500 square foot in total, what is that? That's 20%.
Uh-huh.
20% home office is not unreasonable. I think a 50% home office is kind of pushing
Stretching
it
it.
and
Yeah.
unreasonable. It could be legitimate though if someone really has it set up and they can defend that. But if it's a 15-20%, which includes your storage, your streaming area, and it's not in your living room, it's like a set aside spot,
Sure.
then you take the whole like rent, utilities, and all that times the percentage.
Yeah, are you serious? So you can actually, let's say my office that I'm in right now is 20% of my house. So I could actually take 20% of my mortgage that I pay and deduct that?
Yeah, if you own the house, it'll be the
Yep.
mortgage interest, not the total
Got
payment.
it. Okay.
And then you can even choose to depreciate like that portion. Gets a little unnecessary. I mean, it depends, but
The key is
yeah.
to keep things simple, right? So, okay. And I believe internet is another thing you can deduct, correct?
Mhm.
These are things that we just don't really think about, but they're so obvious. It's
And
like, oh yeah, of
telephone, your
course.
cell phone too.
A cell phone,
That's
thank you.
another
Cell
one that
phone.
you might forget.
Yep. And so I hope you guys watching at home, like you're writing these notes down. This is super helpful, and these are just the basics that you can deduct. We covered tools to use for bookkeeping. I like what you said, like quarterly at a minimum. Um, I think for me personally, I'm gonna do it monthly, just so I
Mhm.
can learn and get my hands dirty. And by June, maybe I'll switch to quarterly, but I definitely want to do monthly
Yeah.
just to get the cadence down. What are some of the biggest mistakes that sports card streamers and owners make?
Um, I think some people initially see I made like $20,000, but they don't realize it's a slim margin kind of game. It's unfortunately, we don't have the highest net profit in this industry. So you could be kind of deceived and like not planning appropriately for that, your cash flow and such. That's one thing.
Yeah, it takes a while to realize with the shipping supplies, the whatnot fees, even your time, right?
Hmm.
One thing I've been doing, and it's kind of going back to elementary, just bookkeeping 101 is like, here, give me a second. I'm literally going into each card Jordan Addison autograph, and I'm writing down the actual amount I spent on this with shipping and taxes. Of course, I'm tax exempt, so this is just more like the card. And so it's basic, but it's good for me. So at the end of every show, I'm just
Nice.
literally ripping these off. I'm adding them. And I know there's a better way to do it, by the way, but I'm ripping these off. It's super manual, and I'm adding them, and that way I know exactly what I spent on that show, and then obviously whatnot gives me my gross sales and net sales. And so today I did an hour-long pop-up, and it's not a lot, but I made $105. I'm like, okay, good. At least I know now, right? And
Mm,
just
nice.
knowing what you're making, or even if you're losing, it kind of forces you to adjust of like, what can I do differently? How can I buy smarter? How can I
Yep.
spend a little more time maybe selling the card while I'm actually on air? And so while it's kind of elementary, it's really helping me because
Yeah.
I wasn't doing that for a year, Johnny. And I'd end the stream and be like, gosh, I hope I made money. I think I made money, but I think. And I think that's kind of what it comes back to what you said. I think it's a lot of us are just kind of like it's a guessing game. And
Hmm.
it isn't until you actually do the numbers and be like, okay, this is actually where I am right now. And maybe this is why I have so much credit card debt because I haven't been paying attention
Yeah.
to what I'm actually bringing in.
What would you start that card at on whatnot?
I would start at $2. I'd
What do you
start
think
at
it'll sell
$2.
for?
What's that?
What do you think it'll sell for if you had like 30 people in the room?
$25. So I think I would make around $5 or $6 off this.
Yeah.
Yeah, and that's, I mean, oh, I've learned a lot.
That's
I used
good.
to sell more higher end cards, and I'd get my butt kicked on higher end cards. First of all, you'd invest $100 for the card, and then you take a hit on it, and it's like, it doesn't make sense. I could buy a ton of like $10 to $20 cards and make, $4 to $5 each on each card, and it
It's an
just made more
auto
sense.
numbered or like a good name, good rookie
Yep,
quarterback or something.
yep.
Yeah.
You have to jump on my show. I have one on Saturday morning. That's my plug to you. 7 a.m. What else? We talked about kind of, when you're doing all your deductions and you want to make sure that it's realistic, right? The last thing you want to do is get audited. So, like, can you talk a little about that?
Yeah, there's like NAICS code, which I think most people would just do it like all other miscellaneous retailers. But the purpose of that is basically IRS has a database of all of the tax returns that are filed under that kind of code. And so
Hmm.
they get like an average of what those kind of people do. And so now, there's all variances between that because if you are going to card shows to source your inventory and you're flying once a month, it's honest that your travel is going to be quite high. Even though if that's going to be 15% of your sales, it's kind of high. But if it's legitimate, then you should feel no problem about that. I would be
Sure.
concerned if your sales are lower and I see higher expenses like that for travel or for excessive meals. Those are the typical things that kind of
Sure.
stick out. But supplies, all that stuff is pretty common and no problem.
Got
Home
it. So
office,
just,
you want to be careful on that one too.
yeah. So just don't get carried away. Someone in our group that I was telling you about, Chill Streamers Network, sent a question. It's very wordy, so I'm going to put it in chat.
Hmm.
In terms of tracking, what is COGS again?
COGS, cost of goods sold.
Cost of goods sold for revenue purposes, things like shipping supplies. Is it just to mark that as an expense when you buy those things and then not worry about the COGS portion when you sell the cards or some other way? I was a little confused at that. That's why I sent it to you via chat.
That is a good question. Cost of goods sold is the traditional approach. Um, so when you buy a card for $16 there,
Hmm.
that let's see the simplest way. There's going to be two methods you can choose: accrual or cash. So I'll explain both of them. If you bought that card for $16, traditionally speaking, which is accrual basis of accounting, you cannot expense or deduct that card cost, the $16, until you sell it. So if you bought that in 2025, you cannot put that deduction of $16 on your 2025 tax return. You have to
Interesting.
wait until you sell it. Cost of goods sold. It's the matching principle, which makes business sense. So you can see your margin, your sales, and costs come together. So
Right.
that's always how it's been, and that's also a number of CPAs. You can't mismatch purchases and sales. Um, there is on the tax return, you check off cash basis or accrual basis. So almost everyone here will be their overall method is cash basis, which means whenever you purchase something or you sell something, you just recognize it like based off of when you receive the cash. However, even with an overall cash basis method, you are required to have accrual basis for inventory, which means you have to match the cost when you sell it. But there's a change. And in 2018, there was a law passed. In 2021, it was kind of more firmed up. And so, if you, not every CPA would interpret it this way, but there's an interpretation where basically now, if you are under 31 million in revenue, you can choose a different method, and essentially now you can your inventory portion you can treat as pure cash basis. not the traditional accrual basis,
Sure.
which means in 2025, you could have taken that deduction of $16. But when you sell the card for 25, then you have a $0 cost basis.
Mm,
So there's downsides to that because now you're gonna flip flop you're gonna be in a higher tax bracket one year and lower in the other. In principle, though, you do always want to accelerate deductions. That's like real estate. You try to have depreciation early on,
hmm
but there's a little bit involved with this. I won't. I'll make a video. I was going to make a video about this because not everyone is qualified to do this. But basically, what people think is I can just cash in, cash out, and like everything is purely that way. And then when the end of the year comes, I can now stack my cash expenses so that I can reduce my income. And you kind of can do that, but there's a certain rules that you have to follow as well.
Johnny, I understood about 75% of that. And the beauty is people like you exist. And this is why I need your help. And if you guys are watching, this guy exists and he's here to help. So let's pivot. First of all, thank you so much. I think I know everyone got a lot out of this. How can people leverage you? How can you help them? How do we get that started?
Right now, I'm almost at capacity. I'm building a team so I can service more people.
Great.
Um, but the three ways I'm available right now is I made these tax packs. It was a fun project, and there's like a free tax return hit and things in here. So they're $5 on my website, and then there's a free ebook in there. It's 8 chapters. So that's the first, and then I have a free discovery call. I'm trying to now limit that to like people that are interested in bookkeeping and tax services. I do get a lot, and I love talking to people. I just have to take care of my time, but
Of
that's 20
course.
minutes. And then some people that just want to jump right into, I have a bunch of questions, or I want you to review my spreadsheets, my systems. I do an hour paid consultation, and
Excellent.
then I can file
Obviously,
taxes and stuff
I'm gonna
too.
put all your contact information below, so everyone's gonna have an easy way to get a hold of you. Um, and that's excellent. It's 2026. I mean, you obviously are extremely popular just based off views, and you're the first person that pops up when you go on YouTube looking for any kind of sports card tax help. What's your strategy? What's your long-term goal for the year for your business?
Yeah, I'm trying to scale now. Initially, this is so large. I mean, this industry, our industry is so large, and I want to scale. I would like to service more people starting up. So one way to do that, I was doing a lot of one-on-one consulting and setting up bookkeeping systems and helping people with tax knowledge. I can't do that super much, so I'm gonna set up a community where ask questions there. I'll do like monthly calls. I'll have some preloaded templates and video trainings and stuff. So I'm hoping that could be a bigger spread to help people.
We get so stuck in our own world, and you realize TGC is bigger than us, Pokemon's bigger than us. Like you, and now SpongeBob. I think you did a SpongeBob video the other day. Like
Yeah,
it's like you're in a
One Piece
you're in a
now.
mark. You're in one
Yeah,
of the most um
it's insane.
fastest growing markets right now, and there's only one of you. So I think yeah, like you said, like you got to scale. You got to add more heads. I believe you do. Don't you actually go to some sports card shows as well? Do you set up tables or no?
I would like to. Yeah, I was going to. I have my Batman. I have 1966 Batman set and 1966 Marvel.
No
I
way.
wanted to do a show on my dad's channel, and I haven't gotten to it yet. But yeah, I would love to set up at a show, and I'd love to even do some whatnot shows as well. But we'll see when I can do that.
Well, hit me up. I'd be happy to help you. I'll set you up with a raid. I'll make sure a bunch of people come and see you. That'd be fun.
Raids are fun. Yeah,
Excellent. Well, again, man, I appreciate the time. I could literally talk to you for the next 3 hours, but I think we covered a lot of the things that new sellers and even, veteran sellers that have been selling for a long time could help with. Is there anything else we're missing? Anything else that we haven't covered that you can think of?
well, your 1099Ks that came in today,
Yes, let's talk about that.
the IRS, well, whatnot or Stripe rather. You have whatnot has Stripe or PayPal for the payment processors. So one of those payment processors told the IRS that you made money if you received the 1099. So do not disregard it. If you do, then you'll receive a notice that you didn't put it in there. And you need to determine your deductions and prepare a profit and loss statement for 2025. And that will go on a Schedule C. So you have to like just get something on a spreadsheet to your supplies expense and all that stuff.
I might edit that and put that at the beginning of the video. Because sadly, you know what's going to happen? People are going to ignore it and be like, ah, they won't
Yeah.
worry. But yeah, IRS knows you made money. So incredibly important. Um, and we kind of talked about this off camera, but I think webinars for you would be amazing.
Hmm.
I can see those taking off big time. I know I have hundreds of friends that would love to seek your help and are willing to pay some money. So I know I'm going to be
Hmm.
calling you later. That's for sure. So, well, cool, man. I appreciate it. We've been kind of playing phone tag a little. I really appreciate the time. Obviously,
Hmm.
we'll be talking in the future, but appreciate your time, Johnny. Keep doing what you're doing. We appreciate it. Have a great night.
Thank you.
Thanks, man.